Hello guys, welcome to the Trading Parrot. We are perceiving extreme fears in the market and we are seeing the price action testing not just the daily, the 4-hour, but also the weekly and monthly time frame is currently at risk. In today's video, I'll give you an update on my long, my short, and in general overall strategy on how I'm approaching this challenging market. If you're not part of my elite membership on Patreon, you missed probably the live stream yesterday, but I have good news. It's publicly available from today. It's called Altcoin Bear Market Fears, and it includes not just TA on the weekly time frame for all the altcoins in this list, but also liquidation levels as well, social dominance, longs versus shorts, on-chain data, and everything. We cover XRP, Solana, Ethereum, Track Origin, Chainlink, XPL, Pump, Avalanche, ENA, BNB, and Engine Coin. If you want to be part of the people that select this set of coins that we review on every Thursday in a private TA session, you can join as an elite altcoin trader on my Patreon, and I'll see you next week. If you want to trade on an awesome exchange, consider opening a new account on Tubi. 2 minutes to register. KYC is optional, and they're currently offering 100,000 USDT for the people that took losses so you can get back in the market. The link is in the description if you want to take advantage of the promo. In terms of news coming for Perplexity, we have one bullish and two bearish. The bullish is short-term Bitcoin holders are adding 12 billion post-crash. The question is, are these going to be able to hold the price? So far, we are struggling to hold that level, and the fears in general are to lose the 100k mark. We also have some outflows coming in yesterday, 500 million, 500 hit yesterday on the spot ETF on Bitcoin. And we got some events in general markets coming in as well. This time, some fears of rate hikes affecting the Bank of Japan. Quinten is saying this is the weakest I've seen BTC in a long time. I think we can go to 101.5 and then we see how we do. Remember that in yesterday's video, I say that the deeper we go towards the trajectory of the week that we have last Friday, the more I tend to believe that we can put a low relative to that. And currently, we went as low as 103k so far, so pretty close to the previous low. The next low is around 97k, which is a number that is going to resonate from multiple analyses that I'm going to do in this particular video. Caleb is talking about the challenge during the Bitcoin bull market is a retest of the 200 daily. The combination of the simple with the exponential moving average is showing that we spend about a month below it before we reclaim it and we look for a new trading range on the upper end. This is a model that has played out in this particular cycle, but remember that at some point it's going to expire, and it's not all about identifying the positive patterns that play 2, 3, 4 times, but more emphasis you should put on when it breaks. How does it break? This channel is data driven and pain first oriented, and that's how we survive the challenges in the market. Polymarket is saying that it's more likely that aliens are confirmed this year, a 6% chance than Bitcoin hitting 200k with just 5% chance. Joao is acknowledging the cycle nature so far that we are currently still respecting. People are asking me, are we entering into a bear market or no? Well, so far, as you can see, we are following this by the book, which is still not 100% confirmed that we are going into a bear market, but given the high performance of the patterns that you're seeing in the screen, it is a bit silly to ignore it and say, no, this time is different, I'm gonna go against the current because institutions and blah 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 blah. Yes, you can have some optimism that things could change for Bitcoin, but if you don't get a full confirmation of that and you're still following the same trend by the book, being a contrarian at this time is the perfect way to get everybody wrecked. According to this pattern, we already hit what should be the top, and we should be on the way towards a bottom of the market in October in 2026. It's not a secret that the taker sell volume is hitting high numbers. This time it's getting very close to 4 billion in the past 3 hours. This was early this morning. Captain Fabic is already talking about the end of the bull market. The more that we see patterns like this, extremely bearish, or calling for numbers like 10k, 5k Bitcoin next and stuff like that, the more people get extreme fear with that, the better we can get an entry to at least take advantage of a dead cat bounce. Caleb seems a little bit concerned about what we are currently doing in here and hoping that we can reclaim that as soon as possible. Axel already put the line on the support saying that 106 to 107 should have been support. That's where I was entering with my initial long, which ended up getting filled at 108.7. He refers at those levels need to be reclaimed as soon as possible if we want to remain bullish, whereas Alpha BTC is calling for levels at the low end of 100k. Superbro posted this showing that we are in the area of the golden pocket here where we should bounce to the upside, but we can see that we already didn't. We went into 103, so a bit overextended to really call it a successful golden pocket bounce. Today we got plenty of questions from my community. You're more than welcome to join on my Patreon, link down below. You can use any tier to be part of these custom questions that I get from them. Have we bottomed? The answer is I don't know, with the caveat that I'm not here to know if we bottom. I know it's just a joke, but I want to make sure that it's very clear that I am not here to forecast price, bounces, levels. I am here to identify strength versus weakness, probabilities of bounces, high performing setups. Once I see them, we can use them in our advantage. Is this the beginning of a bear market? Well, so far we put an all-time high in the precise time based on past performance, and we are following a correction that if it starts getting too deep, it could confirm a bear market. We already know what Bitcoin needed to do to confirm a Q1, Q2, which is to hit 130 and hold it into support. Later, I'm gonna show you a potential setup that even if it's a dead cat bounce could bring an all-time high. I'm gonna show you later in the video how we can produce that setup. Lara is asking what will be needed to reclaim full upward momentum, not just a dead cat bounce at this stage. So I monitor the 20 weekly, which has become my preference just because in the past cycle it worked better than the bull market support band, providing support, and so far this cycle we haven't broken that one. We already tested last Friday that level and we are coming back for a second test. We really need to be monitoring if we lose it. Let's say we go into 90 something and we are below that level. I do care how is the reaction after once we hit it from below, because in the previous cycle we were above it but we showed weakness, we went back below it and then we confirm the bear market. So it fully depends, because you could bounce from this and confirm that you can go into 140, or you could lose it and hit it as resistance and confirm a bear market, or you could lose it slightly and recover into more than the golden pocket if we do a retracement from high to low, in which case we confirm that we have strength as well. Of course, I do not know which one is going to play out, but I adapt to how price reacts to that to decide what to do, assuming I'm already riding a position in profit, taking advantage of the data and finding good entries on the lower end. Support and resistance levels for BTC, definitely we are going to cover double or nothing. Samu is asking about the mini financial crisis in US, general markets and catalysts for a dip to resume. We do have a very divided micro perspective, if you want. We have on one side people thinking that this is just another deflationary recession that is just going to collapse all the assets like indices, gold and everything, and then you're gonna get an opportunity to buy. And there's the other team of people thinking no, things are gonna continue rallying because this is a collapse of the currencies and the bonds, and therefore we should reallocate and allocate even more because those are the ones that are gonna collapse. So within these two teams, some are very allocated and some are very into cash. So they are fighting with each other, trying to convince which one is the right one. It is very tough to really, at this point, start thinking I'm gonna start allocating into gold where it's in extreme greed levels. And at the same time, it's very tough to think about parking your money in dollars when there's so many fears that it could break the multi-year support as well. Unfortunately, that is the $1 million question. Is this going to be a dip? And if there is a dip, is it a dip to buy or not? Talking about general markets, let's take that to the next video separate. How likely will you see BTC going to this liquidity around 90k? I think it's possible and I will definitely not rule it out. I think it's more likely that if we go there, that we are taking between 101 to 93. That's primarily because that is where we see fair value gaps and liquidity on the the short term and on the long term. I'm gonna show it to you. That's the next bucket with a center at 95. Going into 90, yes, it's possible, but that is not the center of that level. If you go into 90, it could be that you are really aiming for 84. Because 90 is more or less in between the peak of liquidity between 95 and 85. I am not necessarily gonna do a rotating assets video to where to take your profits. That is not prepared enough yet to go into an actual video I'm comfortable sharing, so I'm gonna leave that for later. This question is a little bit difficult to understand for me, why you are mixing these three things in particular, but typically when you lose this very long-term moving averages, you get an opportunity to hit them as a dead cat bounce or to reclaim them, and you need to be allocated when you're further away from them using data to get yourself as soon as possible risk-free with a stop loss break even or with a trailing stop loss, so you don't have to face the uncertainty of whether it's going to be a dead cat bounce or a reclaim. Same answer for Diego when it comes to how to exit. When do you plan to take partial profits on your short? And just as a summary, on my short, I'm currently in profits with the 3x is at around a 50% profit. My entry was at 122.4 and my stop loss is currently still sitting at 120.5k on Bitcoin, and I'm gonna keep it there. The explanation of why keeping my stop loss so far away, if price goes into 120, definitely I'm no longer gonna be 50% in profit, is because we went deeper now in the correction and there is a chance that price could want to hit all the shorts up until 117, maybe even up until 120 before then taking another leg down. And I would really like to hold on to that short, so I'm giving it extra room. But if you want to be on the conservative side, since we just broke out down from the 4-hour head and shoulder in here and we already hit the technical target, you could potentially trail it from closer at 111, speculating that maybe we're not gonna come back and reclaim. Since there's so many shorts now exposed and we are within this second potential layer 2 breakout in here, there is a chance that now we push higher into the resistance of 53, that is 111, or if we go slightly higher with a layer 3 breakout, we could get into 120. That's why I keep my stop loss further away. By that time, I recover everything with the long, which is a nice hedge to have. In moments like this, would you add to your long or just keep it without a stop loss? My long currently doesn't have a stop loss. It's a very small long with the expectation of adding lower at levels of the 95, or depending how we fall, if it's triggered by a general market crash, then I might consider to add my second order at 85. It all depends on what's going on at that moment. That's why I don't leave limit orders in the exchange. I am long 65% of my portfolio. What you think is the best thing to do? I really cannot tell you what is the best thing to do for you, Yatar. Most of my answer depends on psychological aspects. Like, for example, if you cut your winners now and you're out of the market sitting in cash, and then you get an altcoin season and a new all-time high on Bitcoin, will you feel really bad? Will you never forgive having done that to yourself? I think the key is to find what gives you peace with yourself and trying not just to make peace with yourself in the present, but also in the future. So tell your future self, if that makes you happy now to just exit, that you did the right thing, because in the present you felt better. So far we are following the textbook when it comes to how to enter into a bear market. There is still some additional checks to fully complete the script that we have played in the past cycles, and there is a slim chance that we can still break out from where we are and completely break all models and continue into Q1, Q2 2026. Do I need to know with certainty that? Am I forecasting that we are going into a bear market? No, I don't know if we are going into a bear market. I don't know if we are going to extend into Q1. I have lines in the sand. You've been watching my videos, you know how much I talk about 130, about the resistance on the weekly RSI descending bearish divergences, and I think that is key to confirm it. I am looking for longs at the levels where we are, so if we face that resistance, I am going to be already in a long in profit. If we break it and in Q2 we extend, I just extend the profits. I never needed to know that that was going to happen to take advantage of that. Of course, people are going to say, you're a genius, you knew it was going to happen. No, that's a lie. I never knew. I just use a plan, a strategy. That's it. There are no CME gaps below the price, with the exception of underneath 100k at 97 on Binance prices and at 91.5 as well. I updated the Bitcoin status. You can pause the video and read it. Otherwise, let's go straight into the charts. You can see that yesterday we couldn't break the layer 2 breakout that we were monitoring if it was going to happen. Thanks to that, we put a low, a lower high, and now a new lower low. We're still below the 38 resistance. Volatility still doesn't print a green like it did in this bottom information with bullish divergence there. We're missing on that. We are missing on a bullish divergence. We have a higher low in here with a lower low on the price. Possibly if we start breaking from here, we could get something similar to this, but without the extreme volatility signals yet, because we haven't pierced the percentile on the 4 hour. On the daily, we might pierce that level and get it as soon as possible. If we go below the minus 578 in here, that will mean that volatility is peaking there. We are breaking potentially the daily below the green line, and if we manage to reclaim it in here at 37.63, which is the price of 107, potentially that could be very bullish. I prefer that we do that, pushing the price into 107, because today is Friday and we want the price to close as high as possible before the weekend. Why? Because if during the weekend we extend the losses, we are going to build a bullish CME gap above us, right? Whereas if we close very low and we rally, then we leave a CME gap, another one below the price that joins the party with 97 and 91.5 that I just mentioned. We could also close like this and then on Saturday reclaim the green. That will be also bullish, but again, that can rally up, find resistance, and leave a CME gap below. That's why I don't like it. Pivots of October currently lost first support, in the process of losing it on the daily. So if today we don't close above 108, we lost the first support and we have to deal with the second one again. The third one is located at 97.6 in the CPR model. The head and shoulder is looking really great for the shorts that are already allocated. This could confirm the breakdown. The target is between 88 to 92 on the weekly time frame, and the weekly is currently testing the RSI support. As you can see there, that is the 47 that held us around 7 of April, the last time that we were testing it. Now we have a bearish cross on the stochastic RSI to deal with, and we have a bearish cross on the MACD as well that came all in the highs and send us back into support. The question is, are those two signals gonna break this level once again? You can see that the support on the weekly is currently at 104.8. That is the level that we are testing. Very important. The bull market support band saved the day 3 weeks in a row, and on the 4th week we are back again to test it. If we close like this, we're gonna have to deal with the 20 weekly moving average. Something that looks very similar between these two cycles is this area in here, right? Like the third test and the rejection, which we already have in July, and all this area in here up until October is being part of the same thing that resonates with what we did in March in 2022. So from the point of view of momentum, we are kind of repeating the same recipe as I've been saying to enter into a bear market. A third rejection that sends you back down into a bear market. Now, here's the caveat. When we did that in 2021, we did it as part of a dead cat bounce. In that context was the price. We went already into 69, came back down in here, test this 48 that coincides with this third move of the momentum. This third move of momentum that has been very persistent around this area is not at a low level of price hitting 95 as resistance. It's actually coming from an all-time high, which leads me to believe, what if This cycle had 1, 2, 3, 4, and this just had 1, 2, and 3, and that's it. Well, history can rhyme, right? And that will be one way of rhyming with history, getting a third, and then from here breaking that low and coming back again into 60. Coming from 39 into 60, that's a move of 20 for momentum. Right now, already from where we are, if we go into 60 RSI, that means going into 125k. That's already great. If RSI resets even further, now we are at 46, let's go into 39 or 36, then I reassure you that this RSI target is going to move into 140 to 150. Is that guaranteed? Absolutely not. But that is one way we could achieve that we can keep it in the back of our head without making any noise of FOMO, but just to build a setup that either fails and give us a small profit, or it could play out and then you are the king that took that ride into 140, 150. How do you see yourself taking a trade like a parrot and being the only one? We're piercing again the SOPR, which means that for a second time in a row, this move down in here is constituted by people taking losses. They took some profits at the highs of 116, as you can see there, that pinch 104, but then it came back to the percentile lower level. So as many people as in this area in here are just closing at a loss in the SOPR, and that is an alpha that is bullish. Will that call the precise bottom? Not necessarily, but we can overlap with other bullish signals that I'm gonna show you later to have some reassurance of taking a long. The top bottom weekly, this model that has only broken in this particular area, it tracks volatility on Bitcoin on the weekly time frame, is getting very close to the support of 0.14 on the lower end. If it broke similar to here, it could get to minus 0.28. So I'm gonna track that in the price. Where is that in the price is definitely an advantage to know. If we don't break the model this time, but we just find support where we have done so far every time -1, that is 98k. If we go and break it in a similar fashion that we did last time, then we go to -28, and that means going into 85.5k. So unfortunately, the model broke once, and we have to track what happens if it breaks again. But if it doesn't, and it holds like 7th of September in here, then we could be facing the best entry ever. As I told you, monthly is breaking the support, at least so far intra-candle. We're in the middle of October. We have time to recover, but we need to look at this because this is ongoing moving parts that could lead us into something similar to the setup of 2021, where you lose the support and then you get a revenge rally that brought a new all-time high. It doesn't have to, we don't have to have necessarily a dead cat bounce. We didn't get one in 2013. We didn't get one in 2017. We went straight into a bear market. So all eyes on what happens with the monthly. The yearly is still in the green, but if we go below 93.5, we are facing the chance of closing the topping year for the first time ever in the red. Notice that you get 3 candles, and then we have 3 candles. But if we go below 93 and we close in December like that, we will get the first time that. So yeah, I know topping years have been diminishing in performance. Count the 3rd candle in green after the red. This was magnificent. This was really disappointing. Will this end up closing for the first time in red? I think it's possible, but who knows? The oscillator percentile on futures is still showing us that we have permission to be looking for a long, and the active addresses sentiment indicator is below the lower band, something that in the bull market has been a great entry for longs, but in the beginning of the bear market in the past cycle, it only offered some dead cat bounces. We are below the STHRP, which is the short-term holder realized price. That means that in average, short-term holders are back to being in a loss, and the last times that happened, it has happened 4 times this cycle. 4 times that the short-term holders in the bull cycle are in a loss. The first time was this, and we lasted for about a week. This one is a month. This is more than a month. This is around a month. So you get the average. You could say that around a month being below the short-term holder realized price could be the thing, and that explains why we have so many people in extreme fear. 530 were deposited into spot ETFs on Bitcoin. This is how it looks. It looks almost like not damage yet for the ETFs. And we are in extreme fear at 22. The last time we were at 22 was around April in 2025. Servers potentially, hopefully on Sunday can print a warning buy in here, but I suspect that price really needs to go lower because intra-candle, if we stay here, it just stays at 16. So price needs to go lower to enter the area of the warning buy. In the last 30 days, you can see that the liquidity is pretty much only on the upper end. I entered at 108.7 yesterday because there was a level of big liquidity there. Now we do not have anything below. Maybe that is a bullish, very weak signal. The next level is 109.5, which is very close to my entry to really put a break-even stop loss. So I really need the price to go into 116 or 114 to start considering entering risk-free my position long. My short is already protected by the stop loss. And even though yesterday, in the past 24 hours, we have had more than 1 billion in liquidations, primarily constituted by longs, 77% longs, that is looking like nothing relative to the 20 billion that we have last Friday, which leads you to believe so many coins went into prices of zero in Binance. So what else are they gonna liquidate in longs if they already liquidated everything they can from some specific altcoins? Not the same story with Ethereum or Bitcoin, for example, that had very mild corrections so far. The order book on FAR charts is looking like no one is really interested in a long so far. Some support at 100k and still big resistance at 130. They pull out that resistance of 125 a long time ago. Purple whales pushing up but very humble in the change. We could say that still not very interested. Binance is looking like a arm wrestling between very two close sides. The 106 resistance versus the 105 resistance. Everything is happening at a very close proximity. Some support at 102 and at 100k on Binance. Let's look at those orders on multiple exchanges at the same time. Notice that I have this setup with aggregate exchanges that allows me to see the heat map of everybody. 100k seems to be very heavy in bids, and 123 very heavy in ask. Everything in between in here is support that adds up to the current support, and resistance at 112 more or less is also visible there. You can see how the shorts are spiking and adding and adding and adding, whereas longs still not involved that much. Notice how in all the bull market we've been using extreme levels of bidding at all deviations to call for extreme support. But since the 7th of October, extreme support like these areas in here that are very light, meaning that the percentiles of the past 2 weeks of bid versus ask has reached the maximum level. And every time we have big support, it dumped the market. One, second time, third time, fourth time, it could be the fifth time that the longs are persisting and getting wrecked. I am not saying that the signal is expired and that we should not monitor it ever again. The whole bull market, it worked. But you can see that potentially short-term traders, speculators are just insisting with the long. Eventually, they are all gonna get wrecked and the market maker will perceive that and then it will revert direction. You can observe how they are persisting in here. Pretty much everywhere there is green in terms of support. Yesterday, that support got crushed for a fourth time. Let's see if the fifth wins. I got some other alpha positive bullish in here. The longs are at 70 in global accounts in positions, and this could lead into a reversal to the upside. The last time it triggered was around here in 30 of August earlier this year, and that was a move from 108 into all-time high. It doesn't always play out, but we're looking for confluence, right? At around 77k, we also have above 71, but here there's an area where there were small bounces, but not necessarily that was the bottom. So you can see it's a strong signal for some upside, but not necessarily always always to go to an all-time high. Funding rates are in the negative and we are in extreme fear. All of those are bullish signals that we can also overlap this time, hopefully with all that support and with the fact that we have an open interest cluster at 112k that could attract the price into there to liquidate the biggest level. This time is $647 million of shorts are right there, and we see the delta as well getting very close to 800k. All of that could bring some upside for the remaining part of Friday. Ideally, I don't want to be rallying on the weekend with a CME gap on the lower end, because that could also secure the next leg down next week. Fair value gaps, we got plenty of upside. It spans into 121. On the lower end, we have to go to 98 and below to hit a fair value gap. Thanks so much for watching, guys. I'm gonna record separately the summary, less than 2-3 minutes summary that goes to my Patreon and my YouTube members. I'll see you on the next one. Bye bye.